Good morning and welcome to Dark Gamma's pre-market analysis. It is April 10th, 2026, and we are coming in just about 6 minutes past 6 Eastern Time. The SP 500 is opening essentially flat this morning, sitting at 6,820.7, just about 4 points below yesterday's close of 6,824.66. That is a very tight bearish gap, barely 0.06%, so we are not talking about a dramatic overnight move here. But the structure underneath this market is absolutely worth watching closely today.
That is exactly right, Samantha. A gap of less than 4 points tells us overnight participants were not willing to take a strong directional stance, and that indecision matters. Now, the key reference point we are tracking is max pain sitting down at 6,640. That is a significant 180 points below current price. What that tells us is that options market makers have a gravitational pull well below where we are trading. And if we see any softness in momentum today, do not be surprised to see price wanting to lean in that direction.
And framing the day's range, Dark Gamma's expected move puts us between 6,788.2 on the downside and 6,861.2 on the upside, so roughly 36.5 points in either direction. We are currently sitting right in the middle of that band, which again reinforces the idea of a balanced open. The gamma exposure profile here is going to be critical in determining whether we drift toward that lower bound or try to push toward the top of the range into the session.
On the sector side, the story of the morning is energy leading the charge, up about 0.61%. That is your outperformer heading into the open. On the opposite end, utilities are the laggard, down 0.42%. That rotation out of defensives and into energy is an interesting signal. It could reflect some risk on appetite at the margins. But given how flat the headline index is, I would not overread it just yet.
Now let's talk about the Magnificent Seven, because the picture there is quite nuanced this morning. Microsoft and Meta are the relative bright spots, up 0.22 and 0.20% respectively. Apple and Alphabet are essentially unchanged. Then on the negative side, you have Amazon down 0.10, Tesla down 0.20, and Nvidia leading the declines at down 0.49%. Nvidia's softness is worth monitoring. Given its weight in the index, any further pressure there could be a headwind for the broader tape.
Putting it all together, the scenario for today is a low conviction open with the SP 500 anchored near 6,820. The market is not showing strong directional intent, but max pain remains a powerful magnet far below, and implied volatility through the 0 days to expiration complex will be a real driver of intraday moves. Watch the open interest distribution closely around 6,800. That is your near-term battleground.
Well said, Billy. For the Dark Gamma community, today is a session about patience and precision. Respect the expected range, keep max pain on your radar as that gravitational anchor, and let the tape show its hand before committing to a directional bias. We will be monitoring all of this in real time. Stay sharp, stay focused, and we will see you in the next update. On today's macro calendar, the main event is Consumer Sentiment Prelim at 10:00 a.m., previous 55.5.
There are 4 more events during the session. These releases could drive volatility at the S&P 500 open.
The Magnificent Seven are broadly flat this pre-market session, with the group split almost evenly between modest gains and modest declines, painting a picture of cautious consolidation heading into the open. Microsoft and Meta are leaving the upside, each up roughly 0.2%, while Nvidia is the clear laggard, sliding nearly 0.5%.
Nvidia's weakness is worth watching given its outsized influence on sentiment across the broader tech sector, and a 0.5% dip pre-market can set a cautious tone for semiconductor-adjacent names. On the positive side, Microsoft at 374 and Meta approaching 631 show that mega-cap software and social platforms are holding up relatively well.
Apple and Alphabet are essentially unchanged, each up just a fraction of a percent, suggesting neither conviction buying nor meaningful selling pressure in those names ahead of the bell. Amazon and Tesla are both slightly in the red, with Tesla off 0.2%, continuing the soft drift we have been tracking in that name recently.
Overall, the tone for big tech is one of quiet indecision, with no major catalysts in today's news cycle directly moving these names. Nothing from the headlines around Hurricane Helene reconstruction or global energy flows appears to have sector-specific implications here. Traders should watch Nvidia closely at the open, as its direction will likely set the mood for the broader technology complex.
Time for earnings. Today's reports: FRPH, PLCE.
Earnings are powerful catalysts. The expected move reflects the options market's uncertainty priced in ahead of the report.
Looking ahead to tomorrow: GS, Fast, Sci-Fi. Keep these on your radar for potential volatility.
High beta names can move well beyond the expected range. Always size down when trading around earnings reports.
Scanning the overnight wires, the Russia oil output forecast for 2026 at 515 million tons is worth watching, as it signals continued supply pressure on crude prices heading into the open.
Agreed. And layering in India sourcing energy from both Russia and America suggests they are hedging supply chains, which could add noise to energy sector positioning and weigh on the SP 500 energy components at the bell.
On the option side, I am seeing elevated open interest in energy names, and gamma exposure is skewed negative below current levels, meaning market makers may amplify any downside move if crude rolls over early in the session.
The Samaritan's Purse expansion story is a softer macro read, but watch home builder and materials names for a quiet bid, as 0 days to expiration traders may fade any gap up in those names given how stretched they ran last week.
Zeroing in on the strikes flanking the SP 500 spot at 6,820, the 6,900 call exploded overnight with open interest, jumping over 2,000% to 18,626 contracts, making it the dominant nearby resistance level.
On the put side, the 6,700 strike is the nearest meaningful floor, but its open interest surged nearly 4,800% day over day to 11,300 contracts, signaling aggressive fresh hedging being placed just 120 points below spot.
That massive gamma exposure building at 6,900 on the call side and 6,700 on the put side creates a relatively tight channel, and dealers managing those positions will likely pin price action between those two strikes through today's session.
With put-to-call ratios above 2 on the largest expiry of April 10th and max pain sitting way down at 6,640, the smart money appears to be buying tail protection rather than expecting a smooth grind higher, so watch those two strikes closely as intraday pivot points.
Breaking down the key levels for this morning's open, spot on the SP 500 is sitting at 6,820.7, well above the gamma flip level of 6,627. That means dealers are in positive gamma territory, which acts like a natural dampener on big price swings in either direction.
Right, and the call wall at 6,850 is just 30 points above current spot. So that ceiling is extremely close, and dealers will be selling into any rally toward that level. That overhead resistance could seriously cap upside momentum right at the open.
The put wall at 6,650 gives us a sense of where the floor of dealer support kicks in, roughly 170 points below spot, meaning there is meaningful cushion before downside hedging pressure accelerates. With 0 days to expiration gamma exposure concentrated this tightly, price action tends to get pinned between these walls.
Bottom line for traders watching the open: the setup favors a range-bound session with a hard ceiling near 6,850 and strong support well below current levels. Watch open interest clustering around the call wall, because any push through it would force aggressive dealer hedging and could spark a sharp short-term move.
Tracking institutional footprints, the dominant liquidity level over the past year is the 6,844 level, above current price, with maximum liquidity concentration over 39 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year. making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 6,785 level, below current price, with maximum liquidity concentration over 2 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Here is the complete level map for today's session. S&P 500 is at 6,821, above the gamma flip at 6,627.
1 sigma range, 68% probability, goes from 6,788 to 6,861. 2 sigma, 95%, extends from 6,752 to 6,898.
On the GEX side, call wall sits at 6,850, structural resistance. Put wall at 6,650 is where dealers become forced buyers.
The top institutional whale levels nearby are 6,895 and 6,839. These are the highest liquidity concentrations in the market. Expect reactions there.
11 new institutional entries hit the scanner today, and the flow is anything but quiet. Leading the pack, NVIDIA saw a put contract at strike 180 land with a premium of $12.19 million, expiring April 17, 2026, with nearly 7,700 new contracts in open interest. Right behind it, Amazon drew over $10.6 million into a call at strike 250, expiring August 21, 2026, adding nearly 9,700 new open interest contracts. The ask percentage on both are sitting in the low 60s, suggesting these were filled closer to offer, a hallmark of aggressive institutional intent.
And then there is Floor and Decor, ticker FND, which frankly stands out from the entire list. A put at strike 4750 expiring June 18, 2026 pulled in $9.08 million in premium, with a staggering 26,695 new open interest contracts and an ask percentage of 100. That means every single contract was filled at the ask. In options flow, that is as loud as it gets. Over in semiconductors, Intel appeared twice today. A fresh call at strike 70 brought in $6.64 million, while a previously flagged put at strike 50 confirmed open interest growth above 20%, now sitting at nearly 8,900 contracts.
On the confirmation side, 4 previously detected contracts just validated with open interest gains of 20% or more. SoFi Technologies, a call at strike 22 expiring September 2026, now carries over 24,300 open interest contracts and nearly $2.9 million in premium. AXET Incorporated, ticker AXTI, confirmed a call at strike 60 with over $6 million in premium and 6,500 new open interest contracts. That is a speculative semiconductor name getting notable institutional attention, alongside the Intel positioning we just mentioned.
So stepping back and looking at the full picture, sector concentration today is clearly in technology and semiconductors, with NVIDIA, Intel, Amazon, and AXT all drawing significant flow. On the directional split, puts are commanding attention in some of the larger premium plays, particularly NVIDIA and Floor and Decor, while calls are dominant in the confirmation flow across SoFi, AXT, and Intel at the higher strike. Mixed positioning across the same underlying in Intel, with both a call at 70 and a confirmed put at 50, points to complex institutional structuring rather than a clean directional bet. The scanner continues to track all flagged contracts for open interest development.
Breaking institutional flow alert from the Dark Gamma scanner. A new contract entry has been detected today on NVIDIA, ticker NVDA. The instrument is a put option with a strike price of $180, expiring April 17, 2026. Total open interest on this contract currently stands at 46,927 contracts.
Thank you, Samantha. To put the flow magnitude in context, volume registered at the time of detection came in at 41,285 contracts. The institutional average entry price recorded by the scanner was $2.95 per contract, with a total premium outlay of $12.2 million. That is the gross capital committed to this position as captured at entry.
Now here is the tracking data that makes this a notable setup on our scanner. The current contract price is $1.81, which places it below the recorded institutional entry price of $2.95. In scanner methodology, when the current contract price sits at or below the original institutional entry price while open interest remains flat or growing, that is classified as an ideal tracking setup. In this case, open interest has expanded by 7,693 contracts since detection, now holding at 46,927 total.
Rounding out the data, the underlying break-even price for this contract at expiration is calculated at $177.10 on NVDA shares. That figure represents the underlying stock level at which the contract reaches intrinsic parity with the premium paid at the institutional entry price, based strictly on expiration math. Dark Gamma will continue monitoring this contract for any changes in open interest or price structure. Samantha, back to you.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.